Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. Is a fast-growing restaurant a good investment? In this video, we will be analyzing if CAVA stock is a buy. Can CAVA, stock ticker symbol CAVA, continue to rise higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start off with the price action. Looking at the one-year chart, we see that CAVA had a CAGR of about -8%. Zooming out to the 5-year chart, we see that CAVA had a CAGR of 40%. In the short term, CAVA has had a bit of a pullback, but long-term CAVA continues to climb up and to the right. Now let's hop over to market share and take a look at CAVA's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that CAVA is categorized as a fast food restaurant company. Expanding the fast food restaurant tab, we can see that CAVA has the third smallest market share of the companies in this category, but the green color indicates that the company is growing its market share. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for CAVA, C-A-V-A, and see that the market share is 0.13% out of the publicly traded food, beverage, and restaurant stocks currently in the market. There is not a lot of spend on CAVA, but it shows a nice trend of increasing over time. The 5-year market share CAGR for CAVA is 20.36%. This means that CAVA has gained a significant amount of market share over the past 5 years. If we start in 2021, we see that the market share was 0.068%, 0.07% in 2022, 0.087% in 2023, 0.12% in 2024, and 0.13% over the trailing 12 months. In a tough year, CAVA is one of the only restaurant companies gaining market share. Let's take a look at the fundamentals to learn more. Gross margin is 38%. This is very good for a relatively new restaurant company. Revenue has compounded at around 25% over the past 5 years and has grown to $1.04 billion most recently. Though the rate of sales growth has slowed somewhat, revenue is still increasing. When we look at cash flow, we see that operating cash flow has improved at an astonishing 220% CAGR over the last 5 years. CapEx has worsened at a 22% CAGR. As a result, free cash flow has flipped from negative to positive during this time period. Once a company hits free cash flow positivity, it is usually smooth sailing from then on. Weighted average shares outstanding have increased over the last 5 years, going from 700,000 shares in 2021 to 118 million shares most recently. CAVA has diluted shareholders. The good news is that since IPO at the end of 2023, shareholder dilution has been minimal. Now let's view return on invested capital. Return on invested capital has improved from 3% in 2023 to 15% most recently. While the current value is not particularly high, the trend is very good, and I expect this value to continue to improve. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage, as well as inventory control. Going from -7 days in 2022 to -7 days most recently, CAVA's efficiency has not really changed, but remained very good over time. I love to see companies with negative cash conversion cycle values. Now let's look at CAVA's debt. The net debt to EBITDA has increased slightly, going from -55.9 in 2021 to 0.4 most recently. This means that CAVA has grown into a profitable company and has a very manageable debt load. Last, let's compare performance to the benchmark. If we perform a backtest comparison of investing $10,000 in CAVA versus the S&P 500, we find strong performance for CAVA. In that comparison with the S&P 500, $10,000 invested in CAVA would have grown to $19,597 versus $13,244 if invested in the S&P 500. This is an annualized return of 56.60% for CAVA versus 20.60% for the S&P 500. CAVA investment would have been much more volatile, with a 58.80% standard deviation versus 12.09% for the S&P 500. CAVA outperformed the S&P 500 in terms of the best year performance, for which CAVA grew an astounding 162.45% versus 24.89% for the S&P 500, but underperformed the worst year performance, where CAVA fell 25.33% versus the S&P 500's 6.05% gain. In terms of max drawdown, CAVA fell 42.32%, more than the max drawdown of 7.58% for the S&P 500. CAVA underperformed the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. The Sharpe ratio for CAVA was 0.97 versus 1.22 for the S&P 500, and the Sortino ratio was 1.72 versus 2.18 for the S&P 500. While CAVA has shown a lot of potential, history shows a mixed performance compared to the S&P 500 by these metrics. CAVA is a solid restaurant company with a strong balance sheet and a bright future. In any event, is it a buy? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for CAVA. It is a restaurant company with a gross margin of 38%. If we adjust for the time of IPO, the revenue per share CAGR is 2%, and the free cash flow per share CAGR is over 40%. The gross margin is good, and revenue and free cash flow are growing at a strong rate. A return on invested capital of 15% is not bad and still improving. Next, the cash conversion cycle of -7 days is beautiful. This is what all companies should aspire to. Concerning debt, a net debt to EBITDA of 0.4 means that CAVA is profitable and has very little debt. So from a fundamental standpoint, CAVA looks great. Now let's switch our attention over to valuation. The price to earnings growth or PEG ratio is 2.2, indicating that CAVA is overvalued relative to their projected earnings growth. CAVA was founded in 2006 by 3 friends, initially as a full-service Mediterranean restaurant. With the addition of CEO Brett Schulman in 2011, they launched the fast casual format, quickly expanding their footprint with a focus on fresh, customizable Mediterranean bowls, pitas, and salads. Since IPO in 2023, CAVA has experienced significant growth and employs over 10,000 people with its headquarters in Washington, D.C. As I shared in the most recent portfolio update video, I avoided buying CAVA for a long time. Despite having delicious Mediterranean bowls, their long-term growth outlook is a fraction of what Chipotle can achieve. Still, with their aggressively expanding footprint and solid balance sheet, they have been making strides in profitability. They're also outperforming many rivals in same-store sales and traffic growth, which tells me people are really loving what they're doing. However, CAVA is not without its risks. Valuation is my main concern for CAVA right now. Even though the share price has come down from its peak, it's still not cheap. And while their expansion plans are exciting, the restaurant industry is super competitive. So while CAVA has a lot going for it, I decided to open a mid-sized position and add on any pullbacks. Overall, I give this company a 9 out of 10 using my proprietary scoring system. I like CAVA and think it will be a big boost to my portfolio. Many thanks for watching. What do you think about CAVA? Share your thoughts below. It is always great to hear from you. Check out some more videos right now, and don't forget to put your money where your mouth is.